Hi students, 12th Standard Accountancy, Chapter 5, Admission of a Partner, Illustration Sum number 24. Vetri and Ranjit are partners sharing profits in the ratio of 3:2. Their balance sheet as on 31st December 2017 is as under. Liability side capital accounts, Vetri, Ranjit, reserve fund and sundry creditors. Asset side items are furniture, stock, debtors, cash in hand, profit and loss account given here. And the other information also given here. On 1/1/2018, they admit Surya into their firm as a partner on the following arrangements. Surya brings 10,000 as a capital for 1/4 share of profit. Stock to be depreciated by 10%. Debtors is to be revaluated at 7,500 rupees. Furniture is to be revaluated at 40,000 rupees. There is an outstanding wages of 4,500 rupees not yet recorded. Prepare revaluation account, partners capital account and the balance sheet of the firm after admission. So from the given information, what we have to do, we are going to prepare revaluation account, partners capital account and the balance sheet. First, we are going to prepare the revaluation account. Listen here carefully. Before we are going to prepare the revaluation account from the given adjustment, we need to pause the journal entry for each and every adjustment. It is only help you. You can't make the mistake. If you not prepare, pause the journal entry for the given adjustment, there is a chance to mistake on the revaluation account. If you made mistake on revaluation account and capital account and balance sheet also fully happens to mistake. So to avoid the mistake, we are going to pause the journal entry for the given adjustment. Okay, so let's read the adjustment and pause the journal entry simultaneously. We are going to prepare the revaluation account for each journal entry. Okay, so the first adjustment is Surya brings 10,000 rupees as capital for 1/4 share of profit. What is the journal entry? If the new partners bring the cash as a capital, cash account debtor to Surya's capital account, right? How much rupees? 10,000 rupees. Okay, so we can't enter this transaction into the revaluation account because there is no revaluation account is in this first transaction. So next go to read the second adjustment. Stock to be depreciated by 10%. Listen here carefully. Stock also given in the question. Already stock account is given in the question on asset side of the balance sheet rupees 20,000 rupees. At the time of admission of a new partner, Surya, they revaluated assets and the liabilities account. So, at the time of revaluation, stock account is to be depreciated 10%. So, stock value is already given 20,000 rupees in the question. Okay. So, 20,000 rupees into 10% means 10 by 100, 10101010 cancel. 2,000 rupees stock value depreciated. Okay, stock is an asset account. So, asset account decreased. If the asset account decreases, revaluation account is to be debited. What is the journal entry? If the asset account decreases, revaluation account debtor 2,000 rupees to stock account 2,000 rupees. So, where is the revaluation account appears? It is on debit side. So, you go to debit side of the revaluation account and enter the opposite account, that is stock account. So, to stock account 2,000 rupees entered on revaluation account. The next adjustment is debtors to be revaluated 7,500 rupees. Already debtors value 10,000 rupees is given in the question on asset side of the balance sheet. Okay, so at the time of revaluation, debtors revaluated 7,500 rupees. So debtors value decreases from 10,000 to 7,500 rupees. So debtors is an asset account. Asset account decreases. If the asset account decreases, revaluation account is to be debited. We have to subtract 10,000 from 7,500. You will get the difference value 2,500 rupees. So, revaluation account debtor 2,500 rupees to debtors account 2,500. So, revaluation account is on debit side. So, you go to debit side of the revaluation account and you enter the opposite account, that is debtors account to debtors account 2,500 rupees entered. The next adjustment is furniture to be revaluated at 40,000 rupees. Listen here. Furniture account 25,000 rupees is given in the question on asset side of the balance sheet. So, furniture account 25,000 increases from 25,000 to 40,000 rupees. The different value is 15,000 rupees. 15,000 rupees increases in furniture account. Furniture account is an asset account, right? So, asset account increases 15,000 rupees. If the asset account increases, revaluation account is to be credited, right? So, furniture account debtor to revaluation account 15,000 rupees entered. Where is the revaluation account? Revaluation account is on credit side. So, you go to credit side of the revaluation account and enter the opposite account, that is by furniture account 15,000 rupees entered. Okay. The next adjustment is there is an outstanding wages of 4,500 rupees not yet recorded. Listen here carefully. The outstanding wages is an liability account. It is not recorded into the liability side of the balance sheet. Okay. So after they find out, then they recorded the liability side of the balance sheet. Outstanding wages 4,500 rupees. So after entered that omitted balance 4,500 rupees outstanding wages into the liability side of the balance sheet, liability account increases, right? If the liability account increases, revaluation account is to be debited. So, revaluation account debtor 4,500 rupees to outstanding wages account 4,500. So, where is the revaluation account? Revaluation account is on debit side. So, you go to debit side of the revaluation account and enter the opposite account, that is outstanding wages account 4,500 rupees. Okay. So, we entered all the adjustment related to revaluation account into the here. Now, we are going to find out the total. So, to find out the total, you are going to find out which side has the higher value. Credit side has the higher value. If you get the credit side as the higher value, you have to enter the total on credit side. How much rupees? 15,000 rupees entered as a total on credit side. The same value you are going to enter on debit side in the same horizontal line. If you get the total on credit side, listen here carefully. If you get the total on credit side, you will get the balancing figure on debit side, which means profit. Revaluation account, profit account on debit side. Okay. So, now we are going to find out the balancing figure. How can you find out the balancing figure? The lesser value side, you are going to find out the balancing side. So, balancing figure. The lesser value is the lesser side value. You are going to add the lesser side value, that is 2,000 plus 2,000 to 4,000, 8,000 plus 500 plus 500, 9,000 rupees. Okay. So, 9,000 rupees from, we are going to subtract 9,000 rupees from the total value 15,000 rupees. You will get the balancing figure 6,000 rupees. This 6,000 rupees is called profit on revaluation account. Okay. So, you are going to write profit on revaluation account. Then immediately you are going to transfer the profit on revaluation account into the old partners into their old profit sharing ratio. Who are the old partners? Vetri and Ranjit are old partners. Okay. So, their old profit sharing ratio is 3:2. 3 means Vetri and 2 goes to Ranjit. Okay. So, first we are going to calculate Vetri's profit. From 6,000 into 3 by 5, 1 5 is 5, 12 5s are 60. Okay. Now, we are going to multiply 3 into 12 are 36, 3,600 rupees. Then we are going to calculate 6,000 with Ranjit. Okay, old partner Ranjit. Okay, so old partner Ranjit, old profit sharing ratio is 2 by 5. So, 1 5 is 5, 12 5s are 60. 2 0 is to be added here. 2,000, 2 2s are 4, 1 2 is 2, 2 0 is to be added here. So, 2,400 here, 400 rupees. So, Ranjit profit, share of profit is 2,400 rupees. It is goes to Ranjit old partner's capital account. Immediately, the profit on revaluation account transfer into the old partner's capital account into their old profit sharing ratio. So, we prepared the revaluation account. Okay. Now, we are going to prepare the capital account for the old partners. Okay. So, what is the format for the capital account? two sides. The capital account has the two sides, a debtor side and a creditor side. Debtor side has the particulars and respective partners name. There are three partners there. Who are they? Vetri, Ranjit and Surya. Similarly, credit side also particulars respective three partners name entered here. Okay, and rupees also right here. Now we are going to calculate the capital account. Okay, so whenever you are going to prepare the capital account, first account you are going to enter the balancing fixed capital on credit side of the capital account. So fixed capital already given in the question on liability side of the balance sheet. Capital account Vetri and Ranjit. Who are the old partner? Vetri and Ranjit. Their opening capital is 30,000 rupees, 20,000 rupees is given in the question. We entered into their columns. Then reserve fund goes to capital account. So reserve fund value is 5,000 rupees. So we are going to distribute that 5,000 rupees into their old partners, old profit sharing ratio. 1:5 is 5. Okay, 3,000 rupees goes to Vetri and 5,000 rupees into 2/5. 1:5 is 5,000. 2 into 1,000 equal to 2,000 rupees is distributed to the Ranjit, old partners Ranjit account. Okay, now revaluation of profit on revaluation account, we already find it into the revaluation account. Okay, so that profit on revaluation account transfer to the old partners to their old profit sharing ratio, right? So Vetri's capital is 3,500 rupees. Vetri's profit is 3,500 rupees and Ranjit profit is 2,500 rupees. Okay, where is the profit account? It is on debit side. So debit side of the profit you are going to write the revaluation account on credit side. Okay, by revaluation account 3,500, 2,400 entered into the respective old partners account. Then new partner. Who is the new partner? Surya is the new partner. At the time of admission of a new partner, Surya brings 10,000 rupees cash as a capital. So what is the journal entry? Cash accounted 10,000 rupees to Surya's capital account 10,000 rupees. Where is capital account shows? It is on credit side. So you go to credit side of the capital account. You are going to enter the opposite account, cash accounted on Surya's column. By cash account 10,000 rupees entered on Surya's account. Okay, so listen here carefully. Then profit and loss goes to capital account. Okay, so the profit and loss account is given in the question on asset side of the balance sheet. Loss, if they given asset side of the profit and loss on asset side, it is considered as the loss. Okay, so you are going to enter it on debit side of the capital account. If they given on the liability side, profit and loss amount to liability side, it will be considered as the profit. Okay, then if you get the profit on profit and loss account, you are going to enter it on credit side of the balance sheet. But they given in the profit and loss account on asset side, it is considered as the loss. You are going to enter it on debit side of the capital account into their old profit sharing ratio. So what is the amount? 10,000 rupees. Okay, so profit and loss account 10,000 rupees. Their old partners profit sharing ratio is 3:2. 3/5. Okay, 1:5 is 5, 2 5s are 10. So 2,000 into 3 equal to 6,000 rupees goes to Vetri and the same 10,000 rupees goes to Ranjit. Profit sharing ratio is 2/5. 1:5 is 5, 2 5s are 10. 2,000 into 2s are 4,000 rupees. Profit and loss account goes to Ranjit account. Okay, column we distributed their old profit sharing ratio, profit and loss account. Okay, then we are going to enter given account into the capital account. Now we are going to find out the total. Which side has the higher value? Credit side has the higher value. So we are going to find out the total on higher side. Okay, so 30,000 plus 3,000 plus 3,000, 36,000 plus 600, 36,600, 20, 22, 24,000, 400 rupees and 10,000 rupees entered. The same total we are going to enter it on same horizontal line on the debit side of the capital account. Now we are going to find out the balancing figure, closing balance. Okay, if you get the opening balance on the credit side, you will go to find out the closing balance on debit side. Okay, so we are going to subtract the difference, find out the differences. So we are going to subtract 6,000 from the total 36,600. You will get 30,600 rupees. Then 4,000 minus 24,400 minus 4,000, you will get 20,400 rupees. There is no value on Surya's column, so the same 10,000 balancing figure you are going to on closing balance. So against this you are going to write two balance carried on. This is called closing balance. Okay. After enter the find out the closing balance, immediately you are going to enter it on opposite side below the total. You are going to enter the same value 30,600 rupees and 20,400 rupees and 10,000 rupees to the brought it to the opposite side, enter it to the below the total. Against this value you are going to enter by balance drawdown, which means this is the opening balance of the next accounting period. This is the capital account, opening balance of the capital account for the next accounting period. So we prepared capital account. Now we are going to find out the balance sheet as on 1st January 2018. Okay. So what is the format? On balance sheet there are two sides, asset sides and liability side. Left hand side we called as liability side and right hand side we called as asset side. Okay. Now we are going to calculate first liability side of the balance sheet. Okay. First we are going to always enter the capital account. So who are the partners respected to the capital account? Vetri, Ranjit, Surya. Their capital value is Vetri's capital is 30,600 rupees and Ranjit capital amount is 20,400 rupees and Surya's capital amount is 10,000 rupees. After total the capital account, you will get 61,000 rupees. Okay, 61,000 rupees. Then the sundry creditors. What are the items related to the liability side given in the costing? Sundry creditors and outstanding wages. Okay, so sundry creditors 45,000 given in the question, we are entered here. On the adjustment, outstanding wages item is the liability item. Outstanding wages account is the liability item. So for that we are going to enter outstanding wages 4,500 rupees on liability side of the balance sheet. Now we are going to prepare the asset side of the balance sheet. The first amount they have, first item is a furniture account. They have given in the question furniture 25,000 rupees. Okay, so we appreciated furniture account 40,000 rupees. Okay, so 15,000 rupees increased. Furniture account 15,000 rupees increased means add appreciation 15,000 rupees. After added you will get 40,000 rupees. The next item is a stock 20,000 rupees entered. Okay, so stock account depreciated 10. Stock is to be depreciated 10%. So we have to less 10%. Okay, so less 10 depreciation 10%. Okay, the 10% from 20,000 you will get 2,000 rupees. After subtracted you will get 18,000 rupees. Then debtors 10,000 rupees entered from the question. Then debtors, you are going to listen the adjustment. Debtors is to be revaluated 7,500 rupees. So from the 10,000, 7,500 rupees a decrease. So you have to less the decreases value from 10,000 to 2,500. That is the difference between 10,000 minus 7,500. 2,500 rupees you have to less from the debtors, you will get 7,500 rupees. Then cash in hand 35,000 rupees given in the question, we have entered in the asset side of the balance sheet. Okay, listen here carefully. At the time of admission of a new partner called Surya, who brings 10,000 rupees cash as a capital. Okay, so Surya brings cash as a capital, you are going to add Surya's capital with cash. 10,000 rupees. After added, you will get 45,000 rupees. Okay. So, you will get the total 40,000 plus 18,000 plus 7,500 plus 45,000. You will get 1,10,500 rupees on asset side, and liability side you are going to total on liability side 61,000, 45,000 plus 4,500. You will get the total value is 1,10,000 rupees 500. So, you will get the same total, equal total on asset and the liability side. Okay. So, do you have any doubt? Please comment it into the comment box. Thank you. Take care.